Ladies and gentlemen, welcome back to another watch list. We're going to go over the markets. We're going to go over the S&P 500. We're going to go over the QQQs, the IWM. We're going to go over NVIDIA, of course, because what a beautiful breakout. If you weren't with me live, we'll just go over it one more time. We'll give you a quick update. And then we're going to go over the stocks that I'm in, the stocks that I exited out of, and what I'm expecting for the very near future. Thank you so much for joining me. And now we are going to start. And keep in mind, we have everybody in the Discord. So if you hear somebody pop up, that is going to be somebody in the Discord. You're more than welcome to join. Hit the like, hit the subscribe. Go to the description down below and find our link tree. The Discord is in the link tree. You can join. What am I asking for? $1 million. Pay me $1 million and you can join. No, it's absolutely free. You can find everything for free on the internet. There's no point in paying for it. We give it to you here. We give it to you now. And let's start off by looking at the S&P 500. So the S&P 500, if we look at the daily, you can see that we are still just trading sideways. This is beautiful action, guys. After a huge push and a break through this top, we want to see some sideways action. We don't want to see this thing just continue to go straight up. If we go straight up, we come straight back down, okay? It's not a good look for the overall market. So we don't want to see it get too choppy. This was a straight up move off of this $500 area. If you guys have been with me for any amount of time, I talked about the psychological lever. We bounced off that. We bought shares down there. I still wish I was holding some of them. We are still holding some of them, but we are just sit back, relax, and we're watching this thing rip, tater chip to the north side. Now, I've been talking to you guys about a pullback to the 10-day moving average. I told you I'm talking to my financial advisor as well because I have an outside of account that has a lot more money than my playing around account, and I'm waiting to add that last 100,000 into it. I needed to pull back to that 10-day moving average because if we look back in history, we can see the last times that we've ripped and broke all-time new highs, we pull back and we usually find some support on the 10 or 21-day moving average. I will be happy with getting in with a pullback to the 10-day, and if we pull back to a 20-day, that's fine with me too, but I'm going to wait to get the rest of my shares in the 10-day. Well, guess what? We are risk on. We've been risk on. I've told you that we are risk on after we broke this 50-day moving average. So if you find it and you like it, use risk management and buy it, baby. Make sure you're using risk management, though. Make sure you have a strategy. Make sure you have a game plan, because if you don't have a plan, if you fail to plan, then you're planning to fail. All right? So the S&P 500 is looking very, very good up here. Now, what I want to do, though, is I want to show you the daily, okay? The daily, you can see in the after hours, why did it have all this movement? Because of NVIDIA. I told you when NVIDIA comes out and earnings comes out, NVIDIA will move the market. Did anything else move it like this? Hell no. NVIDIA moved the markets like this. If you look at NVIDIA's chart, in the after hours, it looks a lot like this. Why? Because NVIDIA is in the S&P 500. NVIDIA is a $1 trillion company, and NVIDIA moves markets. It's a leader in our programs. It's in your F401k. It's in your Roth IRAs. You've heard me say this all before. So the S&P 500 is looking really, really good up here at 531.26. You'll love to see it, guys. This is absolutely beautiful for the market. So it being at that, it is sitting at the highs on the daily. So let's go back and look at the daily. It's sitting up here at the highs in the daily, okay? So we did get a nice pullback, but we're still reaching up. We're still at all-time highs. The market still looks amazing. We are still risk on. And why do we use the S&P 500? Because that is what institutional ownerships use as a benchmark. It's what I use as a benchmark. If I have a $100,000 account and I don't make at least $8,000 on my account by the end of the year, which is 8%, well, that means I'm not outpacing the S&P 500, and I might as well just put all my money into it. This is the benchmark, folks. So that's why we keep an eye on it. And as the tides rise, the rest of the stocks do as well. So if S&P rises, the rest of the stocks rise with it, and we are just looking for the leaders in the market. Next up is going to be the QQQ. The QQQ is the tech-heavy industry, okay? It has all of your major techs in here, and it is at an all-time high as well. And I'm sure if we look at this thing on a daily, you'll see what is all this movement. You better believe it. NVIDIA moves the QQQ. It's probably the highest weighted average stock in the QQQ, and you can correct me if I'm wrong. if you want to look it up, but I do believe NVIDIA is the highest tech that's in QQQ. There might be one or two higher, maybe Microsoft, maybe Google, maybe Meta, but I have a feeling NVIDIA is probably one of the highest, at least, if not if it is the highest. The IWM, now the Russell 2000, this is the only thing that I don't like where it's at. It's below a 10-day moving average here. And if we look at the daily, let's just look at the daily here. You can see it's just lagging here. Now this is your small cap and your mid cap. You want to see this thing rise. You want to see it rise on up. You want to see it make bigger and higher moves. Why? Well, because it shows breadth in the market. Now, we're going to get to breadth in the market really soon here, but look at the IWM. When we look at this thing, we are above this key area of resistance. We talked about this. It's the 200. It's a psychological area, and it is a technical area of resistance. We're above it, but we are also above a rising 200-day moving average and above all key moving averages as well. But now we're squatting down on that 10-day moving average. Let's see if NVIDIA moved IWM. It really shouldn't have. It did a little bit, but it shouldn't, because this is small and mid caps as to where NVIDIA is a mega cap, okay? So we're just going to keep that in mind. We'll switch this to the hourly as well. All right, guys, so now we're going to get into a few other things, and I'm going to go through these pretty quick, but for our newer viewers like Jimmy Johns, hey, John Swan, Jimmy, Stephanie, Yosef, if you guys have any questions about any of these stocks, you're more than welcome to ask. Don't be shy. Either shoot me a message in the open chat, or what you can do is unmute your mic and just give me a shout out. You're more than welcome to do that as well. But I just don't want to repeat myself constantly. I don't want to make this boring. So SMH, obviously, if we look at this thing, this is your semiconductors. It's reached an all-time new high. Why? You know why. Say it with me. NVIDIA. Let's look at the RSP. So the RSP is the equally weighted. This is interesting. We had a pullback in the RSP in the after hours. Very interesting here. That is showing that we are below a 10-day moving average now in the equally weighted S&P 500. That's not too pretty. I don't like the looks of that. So it might show some warning signs there if we see the equally weighted S&P 500 kind of pulling back a little bit, right? We haven't reached an all-time new high in the equally weighted. We are pulling back a little bit, so there is a little bit of weakness in the market. Everything's not rainbows and butterflies in this market, and we need to figure out where that's coming from. All right. Next up is the VIX, the volatility index. If you don't know what the VIX is, short explanation, it's the fear gauge. This shows the volume traded in the market. Usually, if it's paired with high volume, so if the VIX is high, that means that we are getting selling off in the market. And you can see here, we got a big ramp up here. You can see a big ramp up all the way up to 1282, and then a nice pullback here. So we aren't in a typically fearful market at the time, or at this moment. We just had a nice little pop here, and now it's pulling back down, which is nice to see, because we don't want to see it ramp up here. This was the recent airstrikes in Israel and all that BS that was going on in the market. If we zoom out here on the daily, this was COVID. If we zoom back out over here, if we go all the way back here, this is the financial crisis right here of 2007 and 8. And, you know, it goes on, right? So right now we're at a very low fear rate. Things are going nice and smooth in the market. Here's the dollar, the U.S. dollar. You can see the U.S. dollar is on a downtrend. This is a clear downtrend on the hourly right here, guys. That's looking beautiful. And you can see it on the daily as well. A clear downtrend. Now, it has an inverse correlation. If the dollar is heading down, the market usually goes up, right? Because if your dollar is worth more money and people are dumping their money into the dollar because they are fearful and afraid, and that is a hedge against their stocks, well, when the dollar goes down, that means people aren't going to make as much money on their dollar, and then what they want to do then is to take their money and put it into speculatory businesses and companies like stocks, ETFs, things like that, okay? So inverse correlation. Let's take a look at Bitcoin. So Bitcoin had this beautiful break higher on the daily, guys. And I'm telling you, I like to just point things out. I seen it bearing on this area. For me personally, when it was bearing on this downtrend, okay, I thought it might be ready for a short. I might want to take some short. But when early in that day it started to break up higher on volume, I thought, man, I should just take a couple minis in the futures. I have a futures account as well. I don't dabble in it too much. I just use it to play Bitcoin. And I was going to go long on this. I decided against it. But if you're looking at not playing futures, you can always look at Mara. You can look at CLSK, which shout out to you, Zamora, on your Mara trade. It looks like it's doing very, very well. I think you bought it up down here at this base, this bottom downtrend, didn't you, Zamora? I don't know what your average is in this, but I know you got a couple of shares down here. So things are looking good. I do like this uptrend. It's looking really, really good. There's CLSK. There's RIOT. There's a lot of different miners that you can play that will follow BTC, Bitcoin. Okay, so Bitcoin has this breakout. It's above its 50 and all of its key moving averages. If you guys remember the last few times we talked, I said we're going to have to get above this 50-day moving average for me to want to talk about Bitcoin anymore. And now here we are above it. So it's looking good. And Bitcoin is moving very, very well. Now gold here, look at this. Look at this clear out, guys. Now I've been telling you guys, I've been so stupidly bearish on gold and silver. And look at this. It pushes back up, clears all-time highs, and now is selling off very hard. Is this the end for gold? I really am still bearish on gold. I really am. And I don't know how many times I got to say that before I actually take a short position on gold. But I'm just, when the general public starts asking me about what do I think about gold? Should I buy gold and silver? That makes me think, hey, it's time to go short in this business. So that is our main ETFs. That's our main things that we like to watch. And we could go over a lot of stuff like XLE, which is the energy corporation. You can see that got a big breakdown today. One of my trades today was ENPH. I noticed ENPH had a huge move off of its bottom. And when it moved up off of its bottom, everything else was moving much lower. XOM, which is the heaviest weighted stock that is in XLE, which XLE is your energy sector ETF, okay? And if you don't understand all these terms that I'm spitting out because you're newer, just know the more that you hear these things, the easier this is going to get. Understanding the jargon, as I like to call it, or the talk, more and often, the more that you join in, the more that you hear about what I'm talking about, you're going to understand that ETFs are a good way to understand how stocks move. And if you look at the heavily weighted stocks, like the biggest stocks in the ETF, they're going to move, they're going to make that move. So we look at the leaders to understand how the faster moving stocks are going to work. So ENPH moves much faster, 5 times faster than XOM or XLE, the ETF. So I decided to take a short in it. Now, if we look at the short, you can see it was much, much higher, and I was waiting to get this short. I started trying to short this here at its resistance area. Why is this the resistance? Well, you can see it's hit multiple times. So I tried to take a short, and I got stopped out. And so I started watching this thing, excuse me, guys. I started watching this thing on the 1 minute. And once I started to see this thing pop up and start popping up higher on volume, and I started to see it fall back down, I decided to take a nice short. I mean, guys, I took a very, very hefty short. I think I was down about 150 or 200 bucks before I decided to take this, and I got it all back, made well over $500. So I made close to $700 total in this trade and exited out after it bounced, created this high, created this new higher low. I set my stop, I pulled it all the way back down to here, and it stopped me out, and then it carried on higher. So I ended up not only making my money back on this trade, just knowing what to play. Watching XOM, knowing that XOM's failing, watching XLE, knowing that that's failing, and looking at ENPH, knowing it's a quicker mover, and seeing that it was much higher than its counterparts, and then it should pull back. I fought it a little bit, but I believed in myself, I believed in the stock, I made some money, and I hedged my account while everything else was pulling back today, I still ended up breaking even or making a little money actually by the end of the day. So that being said, let's go over a few of the shares that I'm in. So Enflix, you can see right here, we'll blow this up on the daily. You can see I entered here on this base breakout. This base breakout was absolutely beautiful. It carried on higher. Now that it pushed up and made new all recent time highs, we're just kind of pulling back. This is very constructive. I've already relinquished half of my shares, a little over half my shares. So I had 25 shares. I had 50 shares, I believe at one. Yeah, 50 shares, and I sold out all the way down to 15 shares. So however many shares that is, I don't know. I think I'm holding like an eighth of my shares left, okay? And so we're up. Let me just take a look. We're still up another $219 on this trade. I'm just holding on to it. We're just going to see what happens. My next stop, guys, is going to be this 10-day moving average, because if you look, my stop would be moved from this base low, and then it would be moved up to break even. But you can see that the 10-day moving average is now above that break even price. So here's the 10-day moving average. And I know B. Stewie and Dan Bob, you guys were talking about this today, so pay attention, guys. Here's the 10-day moving average. As this starts to fall, if it closes below this 10-day moving average, then I'm going to exit. And we can look at previous trades to understand this. So look, let's say we decided to take this stock right here. Let's say this is the trend break, okay? Here's a nice trend break right in this area. We'll just zoom in so you guys understand. And let's say that this looked good on the hourly, and I decided to take this trend break in the pre-market, and I enter this trade, okay? And it moves up higher, and I exit half of my trade here. That last half will not be exited out until it closes below the 10-day moving average. So look, it trades sideways, it moves higher. It moves much higher. It pulls all the way back. It breaks the 10-day moving average, but closes above it. The next day, it breaks below it, but it closes above it. The next day, it closes above it, above it, above it, above it, above it, above it, above it. Man, I sound like I'm rapping. And this continues to move higher until this day. It actually closes below it. I exit my trade here. Meaning, if I would have entered here, I would have held on to my last half of my shares until it closed below it here. And I would have exited out for a 7% gain on this stock, okay? Now I'm going to do the same thing here on this next piece, okay? So I've already made my money on this stock, okay? I've already locked in around $350, $400, something like that on this trade, on this big push up, and I exited most of my shares. Now I'm just holding on to this last 15 shares, guys, until it breaks either my break-even spot, so I can't lose any money on this, or this 10-day moving average. Okay, so I'm moving my stop up to that area. So that way I'm always going to make money on this last piece of this trade. Okay, I like to pay myself into the pushes higher, and then as it pulls back, it's the 10-day moving average is going to be my guide. Now you can use the 21, you can use the 30, you can use the 50. Use whatever the hell you want. It's discretionary. This is how I trade, and I would like for you guys to follow how I trade until you have a game plan of your own. Okay, so that's Netflix. Google, I'm still holding on to as well. You can see here, Google, same objective. After earnings, huge push up, pullback, starts following the 10-day moving average, creates a trend break. Here's the trend line. It breaks above it. I enter the trade. I exit most of my trade after 3 days, which is also its most recent all-time highs. I exit over half of this. Actually, it was half of this trade. I exited half of this trade. I made about $400 somewhere around there. Maybe it was a little less. Actually, it was $250. I locked in $250 profit, and now on this last piece here, it pushed all the way up to all-time new highs at 178.77. Started to pull back. We lost about $97.50 on it today, but we're still up $316 on this last piece of this trade. Okay, it's absolutely beautiful. And where is my stop? Well, my stop originally was all the way down here at 168, right here, 168.82, which was low of day. And then when it broke out and I exited this piece, I moved my stop up to break even. But now that the 10-day moving average has went through my break-even trade, now my next stop is right here. If it closes below the 10-day moving average, then I exit this trade. And if we look at previous times, you can see here it's followed this 10-day moving average very, very well. And if it closes below it, like it did here, I will exit. If it closes below it, like here, I will exit. I will exit. I will exit. It's that simple. Okay? You don't have to make things complicated. You know, they say keep it simple, stupid. That's exactly what I'm doing. The VTI I hold, this is my long-term investing shares. I hold 18 shares of this. We're up $341 on this. This is the account that I hold with my brother. Every time he buys a share, I buy a share. I'm putting my money where my mouth is, and I'm teaching him how to do long-term dollar cost averaging investing. Okay. Here's the VOO. My wife came up to me and handed me over $7,000, and she goes, "Hey, invest this for me." So I decided, you know what? We'll do this as a YouTube. We'll do this together. So on this pullback, it was funny. She hands it to me, I believe, on this day right here. And I said, well, look, I think we're going to get a bigger pullback, so I'm just going to hold on to it, and I'll invest in it as we pull back. Well, sure enough. Why did I say that? Because we broke the 21-day moving average here. We popped back up, and then we started to pull back, right? And so it's funny. It's like next time my wife hands me $7,000 and says, hey, invest this for me, I'm just going to hold on to it because she called a nice pullback. She called the 6-day bloody sell-off, you know. So anytime my wife hands me money, we need to sell everything that we're buying. No, but really, guys, so I just started buying. I started buying as we pulled back. I thought we were going to get a bigger pullback than this, but I was buying in all through this. We bounced off the 50-day. So when we broke and made all-time new highs, I bought the last 10 shares. So I hold 16 shares in total of the VOO. So it's a little over, I don't know, now it's around $7,800 worth of VOO. Nothing too crazy, but I just want to show you guys how to long-term invest as well, because it's not all about swing trading. It's about the long-term longevity of your account and being able to retire in the end anyway. So that's just what this account is. It's nice. It's made $171 since we started investing last month. This thing is a month and 10 days old, and we're up $171. That's simple, guys. It's that simple. We should make about $800 a year on it, which isn't anything crazy, no. But it's also only $7,800 in here. It takes money to make money. The more money you put in here, my end goal, guys, my end goal is have $1 million in my long-term investing account. And if that happens, then I live off the dividends. That's 60, 70 grand a year, 80 grand a year roughly between that. And once you have that, you can comfortably live. I don't know about you guys, but that's all I need. The house is paid off, don't have any car payments, don't use credit cards. You know, I have zero debt. And so if you can get yourself into that situation, then you can live off of that. You don't have to go back to work. You know, and we're getting really close to it. It's a good feeling. It really is. And that's what I want to help show everybody. You can be financially free. Dollar cost average into the market with all your extra money. Next up, FNMAS. This is Fannie Mae. We're up about $100 on this trade. Look at this beautiful daily flag right here. Beautiful bull flag. You get this big push up, pull back, and it gets tighter and tighter and tighter. Good old Mo Wealth pointed this out for us. Mo Wealth, big shout out to you, brother. Is he still in here, Mo Wealth? Where you at? He's not even in here tonight. What the hell, Mo Wealth? Hating on him. I'm a hating on him now. We're only up $96 on this trade. It's no big deal. I'm holding for a bigger expected move. When you have a long-term bull flag in this, I'm expecting a bigger move in this. You know, I only hold 400 shares of this. It's nothing too crazy, but I will be exiting probably half of my shares, if not all my shares, at $6. That is my goal on this, because that is where you're going to start seeing some resistance start to play out. And then you know, I'll wait for another setup, and if another setup comes in, I'll buy more. At the time I bought this, I wanted to get over 1,000 shares. I've only exited about 100 of my shares, so I took 50. Next up is Flex. If you guys remember me talking about Flex, you can see this is a multiple reasons why we took Flex. One, you have this daily base breakout right here. Also, if you look at this same setup, this daily base breakout, you have this undercut and rally. I'm starting to really like to see those. If these break down, don't take them off your watch list right away, because if they get bought right back up, that's a very strong bullish signal in my opinion. This thing traded sideways and created this beautiful bull flag. And then I seen a nice little trend here. When it broke above this trend, I just kept it on my watch list and kept a close eye on it. Actually, I took the trade here on this breakaway, risking the low, and then it pulled all the way back. And if we go in, this is kind of cool, guys. If we pull in, let me switch this really quick for you. Make it look a little cleaner for you. So if we look at this on the 1 minute time frame, my stop was actually set right here. And you can see when I entered this trade, it was a beautiful trade. And then the next morning, this thing had a colonoscopy and it just shit the bed. It came all the way down here and I was within 1 penny of stopping out. 1 penny. And I stuck to my damn rules and I said, nope, I'm going to hold on to this thing as much as I wanted to sell. And I said, you know what, just like, I don't want to worry about this thing. It took off. Look at this volume that popped in. And then bada bing, bada boom. Look what happened the very next day. Look at this, guys. A huge push up. This thing ended green. I still think we have room to go higher, but you guys missed the trade if you're not in it already. So let me maximize the sell. I'm only holding 200 shares. I sold 100 shares right here at 30.37. That was close to 2R. It really wasn't 2R, but I sold 1/3 of my shares. I paid myself on the way up. Beautiful base breakout, huge push on volume. I sold 1/3 of my shares, and this other 200 shares netted me another big profit of $382. So we're up about close to $500 on this trade, but that's just a base breakout. That's just a base breakout I wanted to share with you guys. Now, I got a few more things I want to share with you. what was the CENX. This was a beautiful base breakout. You can see that right here. For the day, I lost $70. I'm actually up about $200 total on this trade. This is why we take our money out when it is time. Here's the base breakout. I entered this trade. We had a huge push up that day and the next day. I exited out of over half of my shares this day. Over half. And I netted a profit of about $150 in this trade. That last 100 shares came all the way back down and then stopped me out at break even, okay? Break even, so I did not lose any money. Sure, it says -70 for the day. That's because it's counting for when the market opened to the market closed, how much I lost. But on the actual trade, on the trade itself, that last 100 shares that I held, did not lose any money on it. So this was a beautiful trade. Even though it went straight up, I paid myself, guys. That's what we talk about risk multiples. Okay, if you measure where my risk was, which this was my risk low of day at 2.53, you can see this went up over 5%. I exited half of my shares over 2R. So if I'm risking 1, I'm exiting out at 2R, half of my shares. The last half of my shares, if it breaks even, I still made 1R on this trade. Okay, it's a beautiful, beautiful thing. And that's exactly what we need to do. We need to pay ourselves first, then let the rest ride. Okay, that's how you protect your account, because that's what we want to do. We want to protect our capital first. Okay, it's very, very important. What is the other one? What's the other one we stopped out of today? I wish Mo Wealth was here because he took this one with me. BVN, I believe it was BVN. Yes. So now BVN did not get me my second share multiple, so I ended up stopping out of break even, but I did not exit any of this trade. I took this breakout. This was a beautiful breakout as well. Now this is what happens sometimes, guys, when you take these trades. A lot of them are going to stop you out, but you need to understand there's a few of them that are going to pay you very, very handsomely. And that's why you need to know risk management when you're playing these things. This thing broke out of this area, moved much, much higher, very, very quick, came back right back down the next day, stopped me out for a $100 loss. No big deal. Not even sweating this, guys. I'm actually, what I'm going to do while we're right here, I'm going to go ahead and set my alert. I'm going to set my alert right here. And if it starts to break out again on volume like it did that same day, I might take it again. It might be a beautiful trade. Sometimes these ones that play games with your hearts, that's ones that pay you the most. So that is everything that I was watching. We can go through some of the stocks that are setting up now, and I'll fly through them because we don't have much time. But before I do that, do we have any questions, guys? Is there any questions that you guys want to ask or anything you want to go through? Because I chewed up quite a bit of that time. We're at 38 minutes right now.
I have a question, but I'm going to save it for after you're done with this part.
Okay.
It's about shorting. I wrote it down this time, so I'll remember.
Well, I'd much rather go over because I don't think we need to go. I have a huge watch list, and I don't want to go over it all. I think we need to cool down in the market. I think there's a lot of things that we've already covered. So I'd be happy to answer any questions because I don't want to draw this out tonight. I want to focus on you guys tonight and not so much what I'm watching for future breakouts because I'm already in enough, and there's plenty. There's already plenty out there that we've already covered multiple times in this market. So
fair enough. I'll ask. This is going to be a bit on the newbie side,
sure.
Which with regards shorting, I am not even a newbie yet because my account I cannot short with yet.
Okay.
I'm making plans for it. That being said, in shorting, let's say I'm in, I don't know, Netflix. Can I be long in Netflix and short? The answer is no, right?
Well, maybe not. No, not under the
not
same
simultaneously.
Broker. Not in the same broker. No.
Oh. Okay, I got you. So the answer would be no then. Okay.
Well, technically, yes, you could be, right? Because you could have two different brokers. You could have a Trade Zero account and a Cobra account.
Yeah.
And you could go long one and short the other. If you were playing options, you could do what's called a straddle play. Now, I don't play options, but there is something called a straddle, and that's where you take a long and you sell a put, or take a long, you buy a long and you buy a put and you buy a.
I could do a butterfly too for the same reason.
There you go. Yeah. And then you sell the one that's not.
Yeah, I'm familiar with it on the option side.
So
the only reason why I was asking that is because. Yeah, the only reason why I was asking that was, and I should have, I should have thought about the broker question to refine my question, because I meant it in one broker just because of. I'm watching you play with the active trader a lot, and because I can't do it, I'm watching that real intensely because I just like what I'm seeing there. And I was just curious, if you were long in the stock and you shorted, really what it would do is just sell your stock. And I was just like, even though I'm thinking that was the answer, I wanted to ask just to, it's better to ask and be sure. You know what I mean?
For sure. Yeah, and your broker won't allow you to go long and short because it's going to go against the actual trade. So if you try to long something and then you try to short something, they're going to think that you're trying to sell the stock that you have already bought in.
Right.
So it goes against its own flavors. Unless you are buying a specific option and selling a specific option, or you know what I mean. And then in that case, it's a strategy, right? And they don't frown upon that. Okay.
Yeah. Now, because you mentioned options, I wouldn't have asked, but because you mentioned options, I could be long, but short in an option play.
Absolutely. Yeah, because options is a totally different derivative. Yep. So I hope that answers everything pretty well. Anybody else? Anybody else have any questions or anything like that? If not, we're going to go over my watch list. Dan Bob, what's up?
I put two tickers in the chat there.
Oh, ASPN. All right. So ASPN's a very quick mover at 6.3%. This thing looks like, this thing looks like it's actually trying to set up. This needs more days here, Dan, but I do like the stock. Okay, we got these huge pushes up. We got one leg up, two legs up. This is the third leg up. Now, I do like the look of this. We need to see it follow this 10-day moving average, which it looks like it's just following above it. You could kind of consider this, a trend. That's kind of cutting it. But you could also look at this thing and say this is a base. But when I look at this, I think this needs more time. So I do have ASPN on my watch list. I do like that it's a faster mover at 6.3%. And I do really like the look of this stock. Okay. So ASPN, definitely keep it on your watch list. ETWO. Ooh, wee, brother. Now this is a nice looking base breakout. What? Okay, let's do a little homework on ETWO here. Yeah, so I like this one. Now here's the issue. First of all, the RS rating, which, guys, if you don't know, the relative strength rating is taking the stock and comparing it to the market. If the market's pulling back and the stock goes sideways or heads higher, then it's going to be relatively more strong than the overall market. Right now, this RS rating is only at 65%, so it's not very strong. You can also see, if we zoom out on the daily here, you can see this thing is on a tremendous downtrend. Now it's above a 200-day moving average, but that 200-day moving average is just flat. This is a base here, and I do really like this structure if that's all that I have seen. And I didn't know the RS rating, okay? Now, also, if we look at the overall market, you can see they aren't really making big money. We can see they're very, very much in debt. Their net income's in the negative $1.07 billion. So this isn't a leader. They aren't making a ton of money. And I'm not saying that this can't work out. This could work out. But with the amount of stocks that are setting up right now, this would be one that I wouldn't play, because I'd much rather play something else that's setting up that would be a lot better. So it's a very good look. I like this look. This is the exact structure that we are looking for. If I didn't know anything else about the stock, I would say, yeah, 2 or 3 more days, maybe a week. Let it get really, really tight. Let it get some more inside days, and then blast off to the north side. Rocket ships, that whole deal. But knowing the stock, knowing where we're at in the market, and then knowing that it's not relatively strong, I'd rather see you guys put your money somewhere else. Okay. You guys have anything else? Any other questions? Any other stocks? B. Stewie? What you got?
Could you take a look at PBF for me?
I'll take a look at PBF. Yeah, let's go through VST really quick, and then we'll take a look at PBF. So PBF is energy as well, so I'm very interested to look at PBF. So VST, guys, so this is also in the energy sector, so I'm glad we're all on the same page here. VST had a nice little breakout this morning. I think I called this out in the chat. So let's actually take a look at this on the hourly, because... So first of all, I want to show you guys this big downtrend here when it broke up after it bounced off the 30-day moving average. This was a beautiful downtrend in VST that broke out. It was just so pretty. And now it looks like it's kind of setting up again here. Let's look at this on the hourly low, because we want to see, oh my sweet baby Jesus. Look at this. Oh my gosh. Guys, it's too late now. It's too late, y'all. It got away from us. Oh no, VST. This is a nice downtrend here on the hourly. Love to see that downtrend. This thing broke up higher. It had like almost a little fake out, and then held a new higher low. Broke out in the pre-market. This thing rip tater chip. This thing, it looks like it's on its way up. And it's funny too, because XLM and XLE, they had these huge pullbacks. So if they hold these areas at the low, but if you look at VST and ENPH, the faster movers, they're still holding out. They're still trying to hold out and do well. So VST looks good here. I almost feel like I missed my opportunity, because then even here, if you want to look at this almost as a base breakout, because it's touched 1, 2, 3, 4, now 5 times, if it can stay above this area, this might be a long here, guys. This might be a long above 96, okay? So, man, I almost want to... I'm going to put this on my watch list. I'm going to put this on my watch list because, honestly, if it doesn't take off here, this might be a good short. Okay, not not trying to be a downer or anything, but with the all the energy pulling back like this, and then seeing these faster movers like ENPH and VST holding out, it makes me think like, why aren't they pulling back? So it's either it's going to show relatively strong in the market. Let's take a look at VST in this overall market. So look at this. It's a 99 rating. It's showing much relative strength. So that's looking really, really well. Okay. So VST is fun. It's exciting. It's fast. If it can't get above, let's say 96.50, 96.64 tomorrow, this might be a short. I'm definitely going to be watching this and ENPH just because these are faster movers and the bigger stocks are really wanting to pull back. So let's look at the slower PBF. Now this thing moves 3.6%, so it's not really that slow a mover, but you can see, wow, look at this. It's actually right here on its uptrend. It looks like we have found some support, Scotty. Scotty, we've found some support. So look at this. It probably could come down a little bit more, but it's right here on its 200-day moving average. Let's maximize this sell. Remove this active trader so you can see a little better. So here's the 200-day moving average. It's showing that it's trying to find some support here. Just below that is its trend, which is around 45, 46. So it's only a few dollars from its trend base or its trending area of support. So if this thing can hold up and continue higher, we might see ENPH and VTI move, or VST move higher as well. So PBF had a huge pullback, just like we seen in XLE, the energy sector, and we seen in XLE, which is the energy ETF. And now we can see it might form a nice little area where it might rip, tater chip to the north side. So we need to keep an eye on energy, guys. I like that you guys are looking at energy. I like seeing that we're kind of like really keeping our focus on it. Predator says NRG. Ooh wee. Oh, this is another energy stock. Y'all coming at me with the energy tonight. I love it. So NRG. Now look at this. This is a nice looking trend. Let's bring this up on the hourly here. So we can just draw this nice trend here. We could draw it like this and say that it's starting to break out. And then sometimes what I like to do is we could just go like this right here and say that might be the next area. We might be a little late here, guys, in the energy on the pullback. Now it's starting to, this hasn't created a new higher low yet. And this big pullback correlates with the XOM and XLE that I've been talking to you guys about. So who knows? This might be the end of energy, but I don't know. I'm just kind of like looking at it all. So this is NRG. This is NS or VST, and this is we need to put ENPH. ENPH. We need to put that in here. Let me just do this real quick. All right, so now that we have all of our energy stocks, ENPH, we can see ENPH is back up here at this area of resistance. Maybe this fails. I don't know. But if we look at VST, maybe this area fails. It's a nice tight area or base breakout. Same difference, guys. This thing could take off. And if we look at NRG, right, we can see it has this trend breakout, which has a nice little base. I don't want to call this a base, but I'm just trying to like have some confluency across the markets. And then you have PBF, which is a bigger mover, which just has this big trend move up to the upside. So we're seeing some kind of confluency here. We're seeing that PBF wants to hold off here, and ENPH and NRG does not want to pull back. And VST doesn't want to pull back. So we're kind of like stuck in this weird lingo, this little game, right? This little area where we're not sure where we want to go yet. So, place your bets. If you have good risk management, you can play this. So PBF, you can use this low of 46 and buy at 49. If you're long, right? ENPH, like I did today. I waited for this huge push up. I tried to short. It exited me out. I seen the backside. I decided to short here, and I made some money. I exited out after VWAP at bounce, right? Now we're at this area of resistance. Maybe tomorrow morning, if we're still stuck at this area of resistance and I notice it's starting to fail, maybe I play this all the way back down. You know, I'll be keeping an eye on XLE and XLM as well for that. So NRG, you know, this might be a nice area for a trend breakout. You know, if we are already considering this the trend breakout, we could even be really discretionary and call this the trend breakout. And then when it clears this area of 82.36, that's why it's discretionary, guys. But we'll have to keep an eye on XLE in general to see what's going to happen. Right now, it's looking like we could pull back an XLE all the way down here to around $87. Okay, you see this big uptrend here? It created all-time new highs, and now it looks like it's starting to head on down, you know. We could fix this up a little bit, you know. So if it doesn't find support here at 91 on XLE, I think we're going to head lower. I think we're at least going to go down to $88 on XLE. And if XLE starts to head lower, we're going to see NRG. We're going to see VST. We're going to see PBF. We're going to see ENPH all head lower with it. They usually follow the overall ETF. We talked a lot about energy tonight, guys, but I'm going to tell you this. We're gonna close up shop tonight. I think this was a very constructive meeting. We're going to have another meeting, let's see, tomorrow night, right, Dan Bob?
Live.
Tomorrow's live. So tomorrow, guys, you guys can all meet in here if you want. You're more than welcome to. And what we can do is we're going to go live tomorrow night. We're going to go on YouTube Live, and we're going to do the same thing that we did today, only we're going to go a little bit more in depth into the tickers that we're watching. We're going to do a full recovery on what happened in the market. It'll be quite similar. And of course, we'll always be open to questions so that way we can answer them, because I want to see everybody grow. Okay. I hope you learned a little bit about risk management tonight, a little bit of understanding of how ETFs work with the rest of things. And I hope you guys got a lot out of this. I know I did. I always do when I regurgitate information. So I hope to see you guys on tomorrow at 9. We will be live. I'll send out an everyone so that way you guys get alerted. And I hope you guys have an awesome night. Enjoy your families, enjoy your time off, and make sure that you are using risk management tomorrow. Okay, guys, no fear of missing out. Make sure you got a strategy.